Hello and welcome, fellow citizens near and far. Today we're having a very extra special discussion about the real estate market. I'm going to be joined by some really awesome people. Hello and welcome. Thank you so much for joining us today.
Hi, Tripp.
Hi. Good to see you.
Good to see you. Nice to see you again, Mel. Well, kind of again.
Hey there.
Welcome in, welcome in. Thank you guys so much for taking time out of your busy schedules to come and talk about the real estate market as a whole. You know, it's really fun that we have one of you on each coast to kind of talk about this with. Feels all encompassing. And I just want to say thank you guys so much for being here. Why don't we go ahead and just take a few minutes to introduce ourselves? Mel, we'll go and start with you.
Yeah, it's so good to be here. Thanks for hosting the panel. My name's Mel, and I teach people how to build wealth in community through seller financing specifically. I'm also a top realtor out of Portland, Oregon, and I've found financial freedom through real estate by the age of 35, and that's what I'm helping other people do now.
And my name's Zach. I've been in real estate 8.5 years. I'm on the other side. I'm in Delaware. For those that don't know, it's like DC, Philly area. And run a team, but have largely just been creating content over the last 3 to 4 years as my main push to bring more awareness around our housing affordability crisis and other matters that seem more important than the trivial matter of just chasing a commission check, at least for me every now and then.
Right on, right on. Yes, thank you guys so much. And yeah, you know, you guys, it's a very distinct industry. It's something that a lot of, you know, people our age are trying to deal with. There's either people who are in their first homes or people, you know, that have kind of given up hope, which is really sad in that in this era, you know, prices are outrageous and things. And honestly, the way this way it came about was I had 4 or 5 different of my followers tell me that they both followed you, both of you guys, and they wanted just you guys to get into a conversation with each other because they really feel like, you know, some progress could be moved with what ideas you guys have been espousing on your channel simultaneously. And so on a whim, I just go ahead and reached out, and I'm so grateful to you guys to be here today. So thank you so much. To get started, you know, the general census of people my age, like I said, we've either given up hope or we've found our way into the system, and it seems like that divide between the two is getting like kind of further and further. Like, you know, I tried to save for a home for several years and ended up, you know, with about 10% for what was like 15 years ago. I do apologize. I'm in the neighborhood, but so. Yeah, there's you know, families working on homes out here, which is really great to see, especially with it being the weekend. But yeah, so this divide, like I have 10% or so for what was 15 years ago, or you know, something like that. But like every time I like look at what the 10 or 15% is now, it's kind of dizzying. What are some of y'all's thoughts on that? Zach, let's go with you first.
Well, first off, Tripp, I just want to extend my gratitude to you for putting this together. And for your purpose as a channel. I really rock with your purpose. I feel that uniting is number one. Getting together and talking and having conversation is number one. So I love this. I do only have till 6:40. I don't have the full hour. I apologize. My wife has me out for dinner. She got mad at me when she saw my calendar. I said, no, I swear it's not 2 hours. So let's just be real. Since 2020, we've seen home prices go up 47% nationally. There's different pockets of the country, Florida, California, areas of Texas that are slightly different. But areas of the Northeast, Mid-Atlantic especially, are still hot as coals. And everybody wants to know, when is it going to crash? When are we going to get back to where home prices were 15 years ago? When are we going to get back to $1,000 mortgage payment? And I have to have that real conversation with so many people that I just don't think it's coming back. And that's a tough conversation, but that's part of the reason why I started creating the content I did, because I found myself having to have it more and more and more and more. And it sucks, but it is reality. There are steps that can be taken. Mel has some incredible ideas on how those steps could be taken. And I really will hand the mic to her on that. But yeah, I think that the message that I like to send the people is that you're not crazy, you're not lazy, and you're not doing it wrong. You're doing it at a different time. And this time is just more difficult.
Right on. Well said. Mel, go ahead and come in with maybe one of those great ideas that you've been sharing.
Yeah, I mean, I want to affirm exactly what Zach was saying. It is it is getting harder and harder to get by in America. Even though, we're one of the more wealthy countries in the world, this disparity in wealth gap has been growing, and what generations could do earlier are just not as accessible to us. And so, I'm a big proponent of what's called seller financing. And a lot of people don't even know what seller financing is. It sort of predates the mortgage. It predates what banks do to help us get a home, And a lot of people aren't aware that there's an option to do seller financing. So seller financing is when you pay a home seller directly instead of using a bank loan, and you do installment payments. So it's like you give them a deposit just like you would a normal loan, and then every month you're making your payment to a neighbor instead of a financial institution. And when you do this arrangement, it's really cool because it's just between you and one other person, which means that you guys get to decide what is going to be the interest rate, what's going to be the down payment, how long do you have until you pay off the loan. And when you have control of all the terms involved, then you can make sure that it pencils for everybody. And so I'm a big proponent. If you want to get into this market, you can. It's not by having a whole bunch of money. It's not by having a great credit score or even a big W-2, income on your checklist. It's about a relationship. It's about finding people who have equity.
That's the big part. It's about finding the home, because that's the biggest issue. Even if you get the money saved up and you got the credit score and you got the income, there might not be the house on the market to even go and buy.
Yeah.
So Mel, just to reaffirm what you're saying, because we had a conversation already, you're telling people how to go find the house, which is the big problem in this market. So I think it's so good.
Yeah, it's true. It's like inventory is dried up. A lot of people think that, the housing market's crashing. It's like, no, the thing that crashed was the number of sales and transactions. What crashed was the realtor industry, the lender industry, because, buyers are trying to get in, but the interest rates are too high, and sellers can't sell and downsize because they can't afford the new payment. And so we have this like standing, sort of war between buyers and sellers because neither one of them wants to move. And to get through that is to create your own interest rate, and then all that disappears.
It does seem like a really creative solution, and I'd love to see some examples in practice of that as people kind of catch on to the idea. Because one of the biggest questions that I got from my audience was like the myth of low stock, and like I know that that's a highly nuanced kind of like thing there, because there's the statistics that people see that there's so many homes per person and that kind of deal, and that is, but it isn't, and there's a lot of confusion around the idea of like what the stock of the housing market is compared to like people on the street. Any words on that?
Yeah, Redfin put out a data piece. It was late in May, early June, stating that we were now in a surplus of sellers versus buyers. And I did a long form video on why this is very misleading, because just because they are tracking sellers doesn't mean they're actually tracking normal people trying to sell their home. They're also, a lot of that number is actual new construction. A lot of that number out of that new construction, more than a third of it, are floor plans. They're not even built. They're just actively listed blueprints. So, and if you look at the numbers of new construction right now, we have 499,300 as of this morning, Nash. And if you look at under construction, completed, and not started, under construction is going, and not completed is going. They are trying to push their floor plans because they're not building homes. And the inventory side of things overall, we're at about 1.08 million nationally. And again, about half of that's new construction. The other half is normal people. Well, we need so many more normal people on the market, but why do it when you have a 2, 3, 4% rate and a $1,200 down payment? It doesn't make sense. And even if it did, where do you go? So it's just a very gridlocked market. And just because we see homes sitting for new construction or even resale taking a little bit longer, like Mel said, it's not exactly a red signal of a crash for home prices, but more so a correction in the real estate professionals.
Yeah. Yeah. That's been the big dip. But that got cut in 50, 60% of realtors disappeared in the last 3 years. And so there's no market. It's a crash of the industry.
And that itself is wild to see, because for a long time, the realtor market was kind of seen as a safe market. And I think that varies state by state, because in New Mexico, I think it's only 9% of the land is public sold and stuff. And everything else is either military or, company, corporate, that kind of thing. So it's driven the housing prices here in my area almost as high as it was in Denver, which is kind of nuts considering it's urban and rural type area type stuff, like I'm in the middle of the desert. But, to be fair, like, there's a lot of, I sent a video to both of you. I'm not sure if you both got a chance to check it out, but the lady who refinanced her home under the VA benefits to save herself $300, but then she was talking about like what their actual plans were to sell the home, and like how basically she got tricked into paying more money in a way. And so like videos like this is another reason why a lot of the people feel like maybe they just shouldn't try. Like it's just going to keep catch them in like a sinkhole and I know that my mom bought her house in a very special kind of circumstances. It was kind of like that, but we ended up helping pay off the rest of their loan, their mortgage, and then the husband died, and the wife sold it to us for what they bought it for in 1972. So, and that, yeah, it was a very like, good karma paying off kind of thing for a single mom and that kind of deal. So, but those types of, finding those places, it can be kind of a crapshoot. And when you're looking at the spans of everything, like all the homes and, like trying to find the place, and like my husband and I are even looking in like different states to try and see like where might be the most reasonable. And it feels overwhelming. And what would you say to the people who are overwhelmed?
Yeah, I mean, besides seller financing, one of the other strategies that I really work with my coaching clients and also my clients who are my realtor clients is I encourage them to do a 5% down owner-occupied Plex loan. And the reason I encourage that is because when you buy a Plex, the rental income of the units that you're not living in count towards your personal income. So it's almost like you got a raise at work by like $3,000-$4,000. And that allows you to buy a bigger property. And that mortgage is now being paid by more than just you. And so that subsidizes your mortgage. It allows you to scale back what your personal expenses are while controlling a larger asset, which is going to create more appreciation, more cash flow over time. And so I recommend people try to do that once a year, once every few years, as soon as they can save up that 5% down, because it's one of the fastest ways to build wealth.
That sounds incredible. Absolutely. So then one of the questions I did get asked is about specific policy changes that either of you might champion in order to kind of get us back on the right track, kind of, steer us towards, the average person being able to jump into the market, maybe both with the creative means and in the traditional ways.
Yeah. Zach, do you have any ideas? I got one if you don't.
Shoot yours first. I want to hear it.
Okay, so this is my pipe dream, right? Like my big goal, my big audacious, hairy goal is to get every American to know what seller financing is. Whether or not it's good for them, they'll have to sort that out. But I want everybody to know that that's a possibility for their own imagination for how to build wealth. And so inherently in that, one of the things that I would love to see on a policy level is for our government to support local sellers with PMI the way that they do banks and corporations and federal loans and stuff. And so that would really take the burden off of sellers. Like
PMI.
Yeah, if they just created like a PMI, a private mortgage insurance that you could attach to any seller finance transaction the same way that you do it for the VA loans or any federal subsidized loans, because that's how we help home buyers get in, is we protect the lender. And so I think we should be protecting people, not just corporations, not just federal plans.
Yeah, and for people that don't know what that is, it's just like any type of other insurance. It protects the mortgage, the giver of the mortgage, from the person who may not pay it. There are some PMIs that actually protect also and can potentially supplement for the lendee as well, but most, like you said, it's just the bank. All right. I have a book with about 17 that I would put into a bill and present tomorrow. I'll give you my favorite two. My favorite two are Sub 2 and an investor ladder. I believe every mortgage should have the opportunity to go 2% less if they've never owned real estate. I think currently one of the biggest issues we have is if rates were to drop, which a lot of people want them to drop. It's like, too late, pal, like get him to drop them. Like, and he's not. And he's not doing it due to inflation, largely due to tariffs. So there's a reason, but there's still also a reason why people want lower rates. They want a lower financing rate. So what I believe that is going to happen is when rates actually do drop, the investor, the corporation, the retiree, the relocator, just anybody who already owns a home and has equity is going to be waiting for that too. And the first-time buyer is going to get beat. And home prices are going to go up again. They're going to be like, what the fuck? So a Sub 2 program would allow us to offer anybody who's buying their first piece of real estate a 2% less mortgage rate.
It's currently 7, you get 5. It's currently 5, you get 3. And it gives an opportunity for them to get into the game. The second one is called an investor ladder. Basically, a take a home, make a home program. An investor, someone buying a property with plans to profit. They do not plan to limit it, only profit. If they are buying it that way, I propose they pay a fee similar to a VA funding fee. I'm a veteran. I have to use my VA loan, and I have to pay a fee to use it. I think an investor, when buying a property, should have to pay a fee when they're taking it off the market, taking the home from the market. And that fee goes toward making a home into a state-run fund, because every state has a different allocation. You mentioned Denver earlier. That's one of the biggest capitals of investors purchasing real estate, Atlanta being another, Las Vegas. State-run fund that supplies funds to first-time buyers for down payment assistance, closing cost assistance, and interest rate buydowns. Yeah. If you combine the two together, you're really driving a wedge into the corporate world, because you're adding some form of pressure financially downward to say, okay, if you own 10 properties, you're paying a 2% fee. If you own 50 properties, you're paying a 3.5% fee. If you own 100, and slowly but surely, you're going to be weaning them off from even thinking, oh, I don't want to pay that 5% fee. That's not going to be worth it. The numbers don't work. And boom, now you've made a home opportune for a normal person. Yeah. I saw one that said double property taxes for people that profit off of the property, which I thought was brilliant, because it doesn't affect the normal homeowner, and it's going to flood the market with affordable housing, because most rentals are affordable homes.
Yeah. Yeah, that's really good. I love those propositions.
That third one wasn't mine. I just saw that the other day. I was like, whoa, that's cool.
I absolutely love it, because I feel like there are plenty of like creative solutions to try and get us back on track. I know that I relent, the Airbnb markets, that exploded and flooded. And at first it was like a really niche and cool idea, but now it has taken a lot of single family homes out of the market. And like anytime that, I've traveled in the last couple of years and like stayed with other people. So like we've decided to go Airbnb. The only thing I could think of when walking in is like, this would be really nice for like a family of 4. Like, this doesn't need to be, only used like 3 or 4 days out of the month or whatever it is. And it's just, it feels, it feels like certain things like that would definitely help correct the situation. And I want to move to one of the questions that I got about using real estate investment to strengthen communities instead of draining them. I believe Money with Mel's came from your side of the debates, and I find that really interesting, because I feel like it's a perspective shift right now. There's that what's best for me is kind of the attitude of the game. As long as I get mine, it doesn't really matter. But shifting the paradigm to like strengthening the community as a whole and like the neighborhood as a whole feels imperative to what we need to revitalize for like the citizens paradigm shift, which is what my big stake on this channel is about. But really like connecting and being more solidified in our communities. Real estate, this definitely is part of that. And so I'm wondering what's your thoughts on this?
Yeah, I think one of the ways that we can sort of reimagine capitalism in a way that could actually serve more people is to think about where is the majority of our budget going. And so when you think about like a typical American budget, roughly a third or even sometimes a half of it goes towards housing costs. And it's like something we don't even think about. It's just like, oh yeah, that's normal. That's what we do. And that's how we get by. But what if we started thinking about where those dollars went? And we started thinking how we could change the route of those dollars to keep them more local. And so what I love about seller financing is it's not about trying to find somebody who's down and out, taking advantage of them. Maybe they're going through a divorce or a death or something and trying to beat them down on the price, and then quickly like renovate it, flip it, gentrify the neighborhood, make your quick buck and get out of here. Like that's transactional real estate. That's the majority of real estate investing, strategy, as they call it. I don't think it's a strategy at all. I think it's a very short-sighted way to do real estate, because basically you're undercutting your own community and creating the problems that are going to cause, if you're an owner there, well, now you have homelessness to deal with. So now your property value is going down, right? Like you're not thinking about the big picture of investing completely and holistically with your neighborhood. Versus like seller financing, it's about finding somebody who in your community who's already been successful. They own their house outright. They've paid it off. They're responsible. And it's really not about a transaction. It's about a long-term partnership. And so I think it's creating a fabric of community, of connection and interdependency that we don't see in our very individualistic culture, American. And so I think as we start to transition away from over-relying on institutions, over-relying on bank systems, and start to rely on one another directly, that's how we reroute that wealth. Roughly $400 billion a year goes towards mortgage interest payments. And you can imagine what that would do to our communities and our neighborhoods if that money was going to neighbors down the street instead. And so really, I think about investing as a tool to redesign capitalism so it works for more of us.
Well, to that interest rate point, I follow this guy, Infranomics. He's a market nerd, and I'm a market nerd, so we get along. The mortgage interest rate that people that own a home are paying yearly, so total yearly.
Yeah.
Gone from about $9,200, $9,500 a year to now $24,000 a year in interest. So you're talking about stuff like that, seller financing. That we had this conversation. I won't go in depth because it's a little bit into the weeds financially. But every time a mortgage is created, we are expanding our economy. We are creating inflation, monetary-based expansion. It's called fractional reserve lending, and seller financing puts a halt to that because we're not allowing Wall Street to finance Main Street.
Yep. Yeah. Well said, Doug.
Yeah, absolutely. And I think that sort of perspective shift, the idea of, getting people to deal with people again, instead of having to go through the designed systems. I know that, Zach, I think you did a video a little bit ago about the differences of like going through the lane of the first time home buyer as opposed to like building your own home on land, and how much more expensive and crazy it can be to really do what was
going into the woods and just building a house. Like, why aren't we doing that? And yeah,
right. Yeah, and it's one of those things where it feels like the entrenched lane, like, no, you want to go this way, is because of the big capitals. And I don't want to start spouting tinfoil stuff about the World Economic Forum, but the whole we will own.
It's supposed to make money if not every single one person that's a citizen within that country is assigned to a property in which taxes can be extracted. Like, that doesn't make any sense other than to do it that way. And that's why our zoning is jacked up. 75% of it's our entire country is single family zoning. And that's why you're not allowed to just go build a random log cabin in the woods without getting the IRS knocking on your door, the cops saying you can't be here. Because it is tinfoil hatting. It is for profit and power.
It is. No, it is. And there was I think it was in 2018 when the World Economic Forum said that they were projecting by 2030 we would own nothing and like it. And so that has been rattling around my head as I see the prices skyrocket and the videos of the people who feel like they are sunk in a hole because they have chosen home ownership and they bought an $800,000 home and all these things. And it's even with the VA benefits and all that stuff, it feels kind of like a trap. And it's weird because that owning a piece of property is not a trap. It's, assets and value and those kinds of things, but it's gotten twisted and it feels really weird. And because like I said, I was one of those people who for a very long time tried to save for a home. Now I'm moving into a fifth wheel so I could be mobile and move around the US, and that's where my plan has shifted because that's what I've gotten. But when it comes to
Mama Bear asked, what's the interest rate now? It actually recently dropped. You could probably get a high 5 right now for a government loan, mid 5 for a government loan, and about 6.08 I think it's sitting at for conventional. Big drop.
How often does that change?
The job loss report. The job loss report that came out pretty much solidified that Jerome's going to drop the rate here in about a week. I don't personally believe, this is just my tinfoil hat, I'm going to go ahead and snack it on. I don't believe the Fed rate dropping is going to lead to mortgage rates dropping.
Yeah, that's
right. The Fed rate, bonds, specifically it's 10, 20, and 30-year bonds, and we're not issuing much more. The auctions we have are very weak. And frankly, if we start doing inflationary activities, which is what bond investors do the most because they have to hold it for 10 years toward maturity. They don't want to see inflation. And if we were to drop rates, it's going to expand credit. It's going to create more money flowing, and it's going to create inflation. Investors know that. So it's definitely an interesting conglomeration of variables that all seem to be kind of perfectly meeting together. Don't get me the WF BlackRock Larry Fink conversation. I promise you that is my Roman Empire. Okay, I will go on it for a tangent for hours because you're right. It is about orchestrating control of a rich one's ideology on the people via their money and power, and that's what's happening live in front of us. And it's happening with assets, and it's affecting people's ability to get into a home.
Yeah, I mean, I think
absolutely right. And
we haven't really touched on yet is one of the factors of why it's so hard to buy today is because we're competing with corporations. In 2022, 1 in 7 homes was bought by a private equity firm. So they were paying all cash, to compete back then, at least in my market, you had to offer 100 to 150,000 above asking. A lot of those folks now are sitting in those houses unable to sell because they overpaid. And so it's sort of like a catch-22, and you're out there trying to compete as, you know, millennial, as a Gen Z. Gen Z is graduating with $100,000 of student debt. That's the average right now. And how do you get into a home loan where you have that much debt? It's almost impossible. You have to have an incredibly high salary. And I know that Zach knows this number, he'll probably about it, but like the median price and what your salary has to be able to buy today is what, 120,000?
It's 121,000 for a median property in America, which is priced at about 433. And then the starter home, according to the National Association of Realtors, is at an all-time high now. It's at 362,000, meaning that a first-time buyer has to make 106 grand a year household to be able to afford a starter home in America.
Yeah. And I mean, this is why I push with a lot of my clients who are social workers, who are nurses, who maybe, you know, nurses make good income in our area, but like a lot of folks who are not making six figures, I start them out on a duplex because while they can't afford a $400,000 house, they can afford a $500,000 duplex because it comes with that additional rental income, which the bank then says, okay, now you qualify for more. And so it can be this way to sort of parlay in from being a tenant into being a landlord, which might feel uncomfortable for some folks. But I think local landlordship is one of the biggest battles that we need to fight around housing. Because when we demonize the local landlord, we're missing the point. Like, we need local landlords. We do not want corporations, not BlackRock or all these other companies that are trying to buy up our housing stock. They're turning
BlackRock actually doesn't own any real estate. Blackstone owns 307,000.
Okay, yeah. It's just like, it's like trying to, you know, when we demonize the local landlord, we miss out on the fact that we need local ownership. And not everybody's ready to buy yet, right? Like, that's the end goal, is to make it so that every person can own their home. But I'll tell you, if a corporation owns it, they're not seller financing it to you. You know, like, there's no pathway to home ownership for normal buyers or normal citizens out there. And so having local landlords means that there's more capital in our community, and there's more likelihood that they'll be able to hand off that baton to another local person.
Yeah, actually, I want to speak on that point about like local landlordship, because I think the term landlord gets kind of marred a lot, and it's kind of fuzzy, the nuanced sort of thing where, yes, the big companies, the big corporations, you know, these apartment complexes that are all owned by one of the shell companies, you know, that's bleeding all of the money right up to the top and that sort of deal. But like, I really recommended when some of my friends, when I was living in Denver, like, you know, they hit the roughs, they had to move out of their apartment and find a place. Like, don't go online, don't go to those places, because they're all hooked up to the same, you know, software that's going to tell you it's this price, then this price, and this price, and this price. Instead, go driving around neighborhoods and looking for for rent signs with phone numbers, like, in the yard, because that is somebody who, like, owns that house and can, like, you can deal with them face to face. And I think that we need one of the biggest, you know, things to you know, it's kind of to understand that full perspective, the idea of like the big conglomerate and the local landlord are two different things, and like you can be much more reasonable with the person when they're face to face. And I think that a lot of people just see landlordship as a big evil because, you know, that gets lost in that nuance.
Yeah, totally. And I think it does the same thing. You know, we classify millionaires with billionaires, and it's like, no. This is, in America, you need to be a millionaire to retire. That is the threshold. Like, you need like $2 million to take care of yourself sustainably from like 75 to 90, if you should make it so far, you know? And so demonizing a millionaire is a problem, because then you can't become one. You can't become the thing that you hate, right? And so we have to adjust our understanding and our having this level around wealth, because being a millionaire meant something in the 70s. It does not mean anything anymore other than you can take care of yourself and retire. Now, being a billionaire probably means that you own a lot of corporations, you're extracting wealth out of our communities, you have a lot of power and control over our economy, over our politics. Those folks are the folks that we do not want to associate ourselves with, that we want to make sure that we claw back our housing stock from. And I think it's really important just to distinguish that a local landlord who might have a few $1 million is not the same as a billionaire who's running a hedge fund.
Absolutely well said. Yes, there is an important distinction. I want to say that, you know, a lot of my followers are veterans, and one of the questions I did get over and over again was what state has the best VA benefits, if that's something that's known, or like, you know, what is the best course of action for, you know, a person with VA benefits looking at property versus like raw land, that sort of deal.
So on the VA side, there's two different loan program or three different loan programs you can do. You can do a version of the 203K, which is a rehab loan. You can do the standard VA loan, or you could go through a new construction VA loan, construction to perm. I think there's two variants as to whether they buy the lot and land and double close it. But you can go pretty much any route with VA. Now, here's the problem. The problem is I push a lot of my VA clients away from one of the best VA benefits, which is that 100% financing. Because right now, if you go 100% financing, and I say this as somebody who sold one home to one person in 2018 that turned around the year, had to leave and couldn't sell. I was like, never again. I cannot live with you going underwater on a home that I already know is priced too high in a market where there is no buyer demand. That's not smart. So the best bet is to utilize the second best benefit, which is lack of PMI. And frankly, there's not a lot much else. It's just on par rate-wise with the FHA loan. It's the same closing costs. You mentioned states. All states have the same. It falls under the same national umbrella. As far as like VA state benefits, Delaware sucks. But for housing, the loan's the same across the board. Mel, do you have any other takes on that? I really don't have any. As a veteran, I'd love to say, do this, guys. And there's not.
I mean, I'll just add that, with these loan products like, VA loan or FHA loan, you can also pair it with seller financing. So and the cool thing is when you pair these loans with seller financing, let's say you get you want to buy a $500,000 house, but the person you're buying it from, they only owe $100,000 on their current home. So you really just need the VA loan for $100,000 to pay off the underlying mortgage. And then the rest of it can be seller financed, which means you can do much more creative terms, keep the payment really low, and help somebody get into housing that wouldn't ordinarily be able to. And to his point, you can make sure that you're not underwater in a year because you can structure the deal yourself. It just creates a lot of flexibility in home ownership.
Right on. Yeah, no, I think that it's an interesting take because I feel that there's that regard of the veterans should be served a better deal in every sense that we can, healthcare and housing and food, shelter, and like all of the basic needs because they help keep the country safe and all of the things that was part of the social contract quite a bit ago that seems to be kind of broken over and over again. We're seeing it. I mean, we're seeing it in civilian life, but to see it echoed through the veterans area it's incredibly sad. Thank you guys for covering that, though. I really appreciate that because, like I said, there's quite a few people in my purview that are wanting to do things. In fact, a few of them are now fifth wheel owners traveling, and doing the road life sort of deal, just because it's more about the experience of it, and I enjoy that. But at the same time, there's this kind of a sadness about there was once a great idea of owning a piece of land and having that as an asset, and it's just that whole part of the American dream now seems really tarnished. Which again, for people who are wanting to get into this market, finding the creative solutions like the sellers thing is definitely something that it needs to be known more. People need to understand the ins and outs of it. I'm unfortunately far past a layman when it comes to this stuff because my husband was the one that was looking at the first time home buyer's loan and getting us into he's the one that's more financially money minded and that kind of deal. I'm more the hippie woo, just make sure everything's healthy and that kind of deal. But so when it comes to these ideas of rates and loans and we're looking, like I said, we're looking at Ohio, we're looking at different states just to see where we can potentially set up shop for ourselves. And we just noticed this general, all over the country, just this general rise, even in places where you wouldn't expect. 5-8 years ago, they were selling for $40,000. Now they're selling for $140,000 to $240,000. It's just and as astronomical as that is, I don't want to just keep going back to this part of people are disheartened by it, but it's hard to kind of keep the hope. You know what I mean?
Yeah. And with what Brooke Up just said, I want to make clear on both of those comments. A, there is no national first-time homebuyer program. Just to be very clear, there is no national first-time homebuyer program. A, that needs to change. So there isn't one. You may have in your area, you can look up blank, your state housing authority. Delaware State Housing Authority is ours, DSHA. And your county, your city could even offer first-time homebuyer benefits. I highly, highly suggest keeping tabs on that. Even set up like a Google search alert, because counties and towns are starting to realize they have to save their people. Second, we need to make homes based off of salaries. That's not possible. It is not a corporation that's running housing, even though corporations are buying housing. There is no CEO of housing. There is no oligarch over homes that is going to make a normal everyday seller take less than what it's worth. If any normal everyday person needs to sell their home, they need to sell it for one reason or another. If they can sell for $300K and the market will accept it, they're going to sell it for $300K. There's nothing that can be done to shift the free trade market of real estate. Now, supply increases and building different styles of homes and creating different programs and styles of financing, or going creative seller financing. There's different ways. But as far as first-time buyer programs, we don't have one nationally. State, county, city, look it up. The salary idea sounds great, but
No way to do it.
not something that's accessible.
Yeah. I think too, there's a lot of confusion. Like, why is housing always more and more and more expensive? And why is rent always going up? And I think that a lot of times people misattribute that to greed, but really it's the printing of our money. It's the devaluation of the dollar that housing prices keep going up. The reason housing keeps going up, it's a real asset. It doesn't go anywhere. You know, nobody can just take off and run with it. It continues to hold its value because it continues to serve its purpose. And that's why it's so important to own real estate. That's why homeowners have 40 times more wealth than renters, is because it holds value. Versus, like, I love your creativity with, you know, the fifth wheel, having your like life adventure, having to be able to have some ownership in that regard. But the fifth wheel is not going to go up in value. It's going to depreciate because it deteriorates over time. And so it's like, how can we, you know, live our best lives and also create assets that are going to grow because the value loses dollar? How do we make sure that we hold on to that anchor? And so as it grows, we grow with it.
And to that point, if anybody wants proof of what you're saying, let's look up when home prices started going up. 2020, 2021, 2022. What happened right there that we can look at on a graph? We know COVID, we know greed. What graph can we look at? Look at the M1 money supply. Look at the M1 money supply. It did get changed in how it's measured, so it's a little more dramatic than it is. But when you look at it, you're like, what the heck? Because it just goes, and then the M2 money supply. Look at both of those. Look at quantitative easing that we've been utilizing 5 different times since 2008 when we invented it. Look at how many residential mortgage-backed securities that our Federal Reserve holds off of the market to suppress bonds. Look at everything all around us that is pushing us into a position to fight with one another, but it's upward pressure that's causing it.
Yes.
And then, like you said, Mel, everyone's confused. Well, why is my neighbor selling it for this? Or, oh, this greedy asshole trying to sell. No, it's just the market. If you want to rent your home and you know your neighbor's rented it for $2,000, you may be like, what?
Yeah.
But you're going to try to rent it for $2,000?
Yeah, because that's what it's worth. We don't set the value. The market sets the value. It's yes, you can always offer less. That's what's so beautiful. When you're the landlord, you get to choose. You get to offer subsidized rent. You know, one of the things that I teach my coaching students is like, you don't need to raise rent every year. And if you feel bad about that, like, yes, your value is connected to the rent. You can always just create a little checking account where you store a little bit of the tenant's money, and when they move out, gift it to them. You know, then it doesn't change your property value. You didn't decrease the rents artificially just to like have a handout or make your tenants really dependent on you so they can never move again. It's like, no, you kept up with rents, but you set it aside so you give them something when they leave so they can actually buy a home or start over, buy a car, whatever they need. That there are ways to create equitable trade even within this market.
And ladies, I got to jump up, but thank you so much for setting up this room. If we want to do this again soon, I would love to do that. Mama Bear also said that's why the Federal Reserve affect rates. I just wanted to touch that real fast. The federal funds rate is an overnight trading rate from bank to bank. When you're thinking about the Fed rate, it has nothing to do with you. You will never buy or sell anything that has anything to do with the Fed rate. The difference is banks can offer different rates based off of whether or not they could get that money cheaper or more expensively. What I said earlier, though, around bonds is normally in a standard healthy market where everyone's like, yeah, the American economy, it's going to keep growing. It's going great. It's awesome. American security in the dollar. But the dollar's weakening, the deficit's growing, and the debt's obnoxious. the three big Ds. And people see it. Investors see it, especially international ones like Japan and Germany, Australia, that hold so many billions and trillions of dollars worth of our debt in the form of bonds. If they see that we are teetering on spiraling, they're not going to dive deep into our debt. And that, for me, means if our Fed goes and lowers the rate obnoxiously, like Trump wants to put his own yes man in May of 2026 as the chairman, he's already taken out Lisa Cook and he already took out somebody else. They're trying to put people in that want to lower rates quick. If that were to happen, mortgage, car, and credit card rates will skyrocket, and we will see one of the most massive transfers of wealth to the top that we've ever seen. We'll watch it happen with no regard for what we can do about it. Yeah. But leaving on such a positive note, thank you for creating this awesome room. Everybody should be going and following Mel. We had an offline conversation. Her course, her book is so valuable. I highly encourage, as somebody who's been in the industry for 8.5 years and has just been searching high and low for what options could be made for a normal everyday person, Mel has one of the best solutions that there is to offer. And thank you so much, Tripp, for sending this room.
Great to see you, Zach. Thanks for joining. I can stick
around. Yeah, we'll absolutely be doing this again, I think. I think I'll have more questions for you guys next time. Thank you so much for joining us, Zach.
Yeah.
Yes, ma'am. See you guys soon.
Yeah. And then, Mel, before I let you go, I do want to just ask an additional question about the state of, like, how, like, because the seller's market thing is really exciting, and the creative solutions that you're offering is definitely something that I think more people could, like, sink their teeth in and, like, you know, find that ray of hope and whatnot. Yeah. One of the things that was a big discussion in the circle that I run is this idea that homes that are built now, like new construction kind of homes, feel like they're more built to be sold than they are built to be lived in. Whereas, you know, 50 years ago, that like really wasn't the case. And like, just, but as like kind of a wrap up question, the idea of like when like somebody's looking for, you know, these sellers and stuff like that, normally it's somebody who has history with the house. It's usually like kind of an older house, right? Like we're not talking about something that was constructed in the last 10 years. You're not really going to find that in the seller's market, correct?
Yeah, so for seller financing, the main ingredient that you're looking for in that partnership is they need to own the house outright. And so, I mean, Zach told me yesterday on our call that something like 52% of boomers own their home outright. So there are a lot of people out there that completely have all of their equity, which means you could pay them $1 down and then pay them in a monthly installment every single month, whatever you agree upon. So, you know, the interest rate could be 1%, it could be 10%. It's just built on a relationship. And with another human being, somebody who you develop an actual care for, they care for you, and you want to make sure that your outcomes are both good because you're tying yourself financially together. When there's that investment and sort of like connection, well, then the numbers need to work. It doesn't make sense for the seller to give you a really high interest rate because then they're going to have to foreclose on you, right? So they have a vested interest in your success as well. And so what I teach my students is like, how do you create what's truly a win-win deal? And usually what that looks like is you do a higher than asking price. So if they want 500, then you're probably going to say, okay, it's 525. And then we'll do a lower down payment, a long term for the loan, so 5-10 years to give the market plenty of time to catch up and to kind of fill that $25,000 difference. So there's plenty of equity when you go to sell or refinance. And then you get to pick your interest rate. And the interest rate, to me, the most important thing about this is to do an interest-only payment. Okay, that cuts your payment down by like a third. So instead of paying $3,000 a month, you're paying $2,000 a month. And the reason why that's so important is because the seller, one, has to pay taxes every time you pay them principal. You know, once you get past their tax basis, they have to pay capital gains on that, which means they're losing 30% of it. So they don't want to, you know, you want to make money on those dollars, not pay taxes on them. So if they don't receive any capital from you, no principal, then they're making interest on that before they pay taxes on it. It's almost like a 401k. So they're very incentivized. And I'll give you like a really clear example. My first triplex, I bought with $500 out of pocket. And the seller, every month, I just paid them interest because that was beneficial for them. And they sold it to me for like $725,000. Had they sold the traditional way, had they sold it and I got a bank loan, they would have paid taxes. They would have walked away with about $560,000, just right away, haircut. That's all they got. But because they sold it to me on an installment payment over the course of 7 years, they not only got their $725,000, but I paid them an additional $250,000 in interest. So now they made the $1 million. So not 560, but $1 million doing it this way. And again, I put $500 down and the interest rate was 5.5%, interest only payments, and it cash flowed day one, which meant I had money to take care of the tenants. So it was a financially responsible decision for all parties. It was a win-win-win deal.
I'd say that sounds like a quite creative solution, and definitely something that really only happens when the parties that are involved, and there's not somebody who is out of state who is just looking at you as if you were a number. And I think that's really the biggest paradigm shift that we could focus on is when somebody is looking to do get into the home market and that kind of thing. Look for people to deal with. Don't look for the banks, and the big deals and things like that might be difficult. JD asked if that was an apartment. You said it was a triplex, right?
Yeah, that was a triplex. And to the question for politological, so capital gains, when it goes by threshold of amount. So if you're selling a $700,000 property, your tax bracket goes up and you end up paying higher and higher capital gains. So for the seller, it's really strategically to spread that out over a period of time or to do it all at the end so they can make money on those pre-tax dollars rather than paying taxes. They're making interest on it. And so, yes, capital gains can be upwards to 30, 40%, depending on your state too, because when you do get into those higher brackets, you're also paying your state taxes. And in Oregon, that's 9%. 9%, anything above 80,000. So, sell it for 700, you're paying a lot of 9% taxes on that. Great question.
Yeah, I'd say that it's those kinds of numbers that kind of make my brain go, okay, cool. Because I don't know, it's not my department. But yeah, so the triplex thing though, that like I said, person to person, that kind of deal. And you said there were other renters that you kind of you took over when you bought the place?
Yeah, I mean, I'll share the story with you. So basically I learned about seller financing. My dad, who had Alzheimer's, passed away, and I just totally broke me. I was thinking, okay, my dad worked for 50 years as a roofer and he had nothing to show for it at the end. The American dream does not pan out. There was no social security to take care of him, no pensions, none of that. And so my dad passed away. I just quit my job with $16,000 in my checking account. I just bought my first property, FHA loan, duplex. And I just didn't want my life to turn out like his. And so I was all in on seller financing. I started cold calling, sending out letters to people, trying to find somebody. And within about 3 months, I met this guy named Kelly, and he owned a triplex. Now, Kelly was a bankruptcy attorney. He liked helping people who were on the margins get through difficult financial times. And I used to be a social worker. I was also helping people who were in foreclosure. So we had really similar client overlap. So we just became friends. And a few months into the friendship, he told me, hey, I want to sell my triplex. Could you do a report on it? And I remember looking it up on my phone and seeing that he had owned it for 15 years. And I knew right then and there that this was going to be my first seller finance deal. And because he had equity, that's the most important ingredient. So when I met with him at the property, he was showing me all the different units. And at the end of the walkthrough, he said, I'd like to seller finance this to somebody. Which is what's so cool. There's so many boomers out there who actually did this in the 70s and 80s when it was really popular. So they know the model. That's how they probably bought their first home. And they also know that it's how they can make the most money. And so he proposed it to me, actually. But I knew about it. I was ready to go. And so that night, we actually just went to a bar down the street and we talked about all the details. And to be honest, at first, he wanted $75,000 down, which is insane. I didn't have that at all. And so I was just quick on my feet and I was like, well, you're an attorney. What would it cost for you to foreclose on me? And he said, about $15,000, which is what it cost in Oregon. So that was his whole risk, $15,000. If I didn't pay him, he spent $15,000, he gets the property back. That's the security for the seller. And so I said, well, why don't we just make that the down payment? If that's all you need to foreclose on me, why don't I just pay you $15,000? And to my surprise, he agreed. Now, of course, I also didn't have $15,000 because I just quit my job and I was living off of that small savings and I could not be handing it over for a down payment. So, seller financing, you get really creative. And I just called some lesbian friends of mine and I asked them for $10,000 loan. And so when I got to closing, I only had to bring $5,000 of my own money and $2,000 for closing costs. So for those of you who haven't bought a house yet, usually that would be $12,000 to $15,000 for closing costs. But when you do seller financing, it's only a couple thousand because you're just working with an attorney and directly with the person. So you saved a bunch of money there too. But I had another problem. I was a very problematic buyer. I didn't have any money. And 2 of the units were vacant. So I was like, okay, well, how am I supposed to pay you when I don't have any money coming in? So with seller financing, everything's negotiable. The imagination is limitless. And I just said, well, why don't I just pay you my first payment in 2 months? That would give me time to rent out the units and have enough money coming in. And so he said, okay, yeah, that's great. So we took those first 2 months payments, threw him on the principal. So he was earning interest on interest, which amazing deal for him. And within those 2 months, I had recouped $6,500 of my $7,000, which meant I was all in $500 on a triplex. And day one, it cash flowed a couple $100, nothing crazy, but enough to take care of the tenants if something came up. And then within a year, I paid off my friends who lent me the $10,000, and then it was cash flowing about $1,100 a month. And once I did that first deal, I was like, whoa, this is how you do it. You just have to understand how finance works, and you just have to go meet your neighbors and then just create a strategic partnership that makes it so they can retire. Like, I can do that. Like, I can do that all day long. And so I just started doing that. I just started sending letters, meeting people, creating these mutual, beneficial relationships. And it was just amazing. It was a path to home ownership and to really to financial freedom. And I did that for 5 years, and then I retired.
That's awesome. That is so awesome. And so I think one of the biggest questions would be like, what would be some of like the tips to somebody who wants to start looking into like the seller, trying to find the right person to make the deals with, like, basically I'm guessing I'm asking for relationship advice.
That's definitely advice. It's funny because I usually frame it around dating advice. It's like very similar. So, by the way, like my book's Bank on Your Neighbor. It's on Amazon. You can also just go to my profile and get a free version of it on podcast because I just wanted to make it completely easy to access this information. I think everybody deserves to own their home, and so it's just free. And it goes into detail about this, but I'll just kind of tell you a little bit. So, I mean, think about when you're dating, you need to meet a lot of people. You got to kiss a lot of frogs before you find somebody who's going to be your princess, right? And so same principle. You got to meet a lot of people. So I was either, sending out letters, which is what I call love letters. And it's basically just it looks like something your grandma would send you. It's like handwritten and very kind, has a, personal stamp, and looks like a birthday card. And it just says, hey, I'm your neighbor down the street. I'd love to get to know you. In case you ever want to sell, I just want to build that relationship now. I would love to own this home, can we talk, basically? And once you start to form the relationship, it's just about getting to know them as a human being. So put the property aside. This isn't a deal. This is not about getting a deal. This is about building a relationship with a person that is going to be strategic for both of you. So, I get to know the names of their grandkids. I get to know, what are their retirement goals? What is their expectations for the down payment? What do they need at closing? Do they have an underlying mortgage that we need to handle? And my book goes into all the different ways to deal with those problems, but you're really just looking for alignment, and you're looking for a way that would work for both of you. And so once you gather all of those clues and really understand the other person's position, then I propose an offer that really meets their needs. And so it's an active listening, understanding, and caring about them that gets you to that yes.
Love that. And real quick, your book is available on Amazon and for free where again?
Oh, if you go to like my link tree, you can just click on there, and I have a link to the podcast version, and you can get it there for free. You can listen on your way to work or whatever. It's super easy. A lot of my videos say "Right Freedom," and I'll send it to you. So that's another way to get it too.
That's awesome. Yeah, I say there's the spreading of information is definitely one of those things. Like I've talked about, education for all and stuff on this platform a lot, because we don't know what we don't know, and if we had the information like you have at our fingertips as a collective, I think that we could make easy work of this issue entirely. And it's just a way to try and get more people to know. So I really appreciate that you have like a podcast version available for free for people, because not everybody's going to have not necessarily like the money to spend or whatever, but not have the intention to go that route. So just to have it like in a way where they can like passively listen and kind of like let it stew in their mind, so they can start thinking about, because I'm big about trying to cast like a hopeful future, like where you want to be 5-7 years from now, but I also do that in like a collective space and like a community sense. And so, but feeding information like that about new ways to go about the paradigm shift is a great way to spark those interest moments. So I thank you for offering that for free. Yeah. I think we'll go ahead and start wrapping this up. I really do appreciate you being here with us. Yeah. Real quick, let me just What do we not hit on anything? I know that you did a really great job talking about creative ways, seller financing, and for the people who feel priced out, the strategies. I mean, I think you hit all the notes here, which is fantastic. Is there anything that you want to push people to specifically as far as your channel and your things?
Yeah, I'll add one more thing. Like, so I got this, I learned this information about 9 years ago. It radically changed my life. Part of the promise that I'm woo woo too. So when my dad passed away, I made a promise to the universe that if it helped me build wealth, I would teach everybody how to do it too. And so, naturally coming from a humanitarian background and social work background, the way that I build wealth had to be in alignment with my own values. And so on this side of financial freedom, I'm really trying to honor that. First and foremost with my free book, you can pick up a copy there. But for some folks who are like, I really want to get into this, one of the things that I did to prepare myself after I learned about this information is I put myself into a community of people who were actually doing these deals. Because it kind of sounds crazy to your normal friends who, when you're like, oh yeah, I just asked 10 people if I could buy their house today. I sent out 100 letters this week to strangers. Like you start talking about the things that you're doing and people will like look at you funny. But when you surround yourself with other people who are just naturally doing it, then success becomes like osmosis. It's like, oh yeah, that's totally normal. And, people do that all the time. I'm in a group of people in my community now where there's lots of references for hope and change and imagination. And, I've seen people buy warehouses and get paid $200,000 at closing, like because they know the skill set, or to buy a duplex with $0 out of pocket. I have friends that have done that. They come over for dinner and they'll talk about it. And so one of the things that I did this year to try to expand this vision and mission is I created what's called the Seller Financing Academy. I created that community of support. And so if anybody wants to like really get into it, like please hit me up. I'd be glad to talk to you about that program and just tell you what we offer. But yeah, I'm trying to build a space that's safe, that people can explore and learn these things together.
Absolutely love that, and it's such a great thing to provide such a space for people, because it's an overwhelming kind of sensation for all of this, and to see people who have worked the game and turned around and want to, like, the paying it forward aspect I'm very big on, because like I'm a monist. I'm somebody who believes that we're all just fragments of the same soul, and on the other end of it, like Andy Weir's the egg kind of thing. Yeah. And so anytime like you can do service for other people, you're basically paying yourself back in a way. And so then that in a grand sense and collective can help us all. So I appreciate all the work that you're doing, like here on TikTok in Oregon and all of the things. I will be checking out your book for sure, because I think I could use the inspiration myself. I hope everybody else here does as well. I would love to do this again in another couple months or so. Maybe we can get a full 2-hour session and get really into the nitty gritty on stuff. But thank you so much for coming.
Yeah, my pleasure. Thank you for having me. It was such an incredible time talking with you.
All right. Thank you all for coming out for that most wonderful discussion about the housing market. Money with Mel and Delaware Realtor Zach are some amazing people that, a lot of us here in the circle have been watching, put out their great content for months, even years now. So I really am so grateful that they were able to take the time and sit with me. I'm over the moon. I really am. I'm going to have this posted on the Tube of View, just so that way anybody who wasn't able to make it in today can hop on over there and see it. Thank you again for everybody who came and sat with us on the conversation. And until next time, be well, fellow citizens.